Markets tumble Friday after Israel escalates Middle East tension with strikes on Iran. Thanks to Friday's decline, the S&P ends a strong macro data week down. So let's hop into our weekly market recap. Markets were muted on Monday while the US and China re-engaged with tariff trade talks in London. It was radio silence through Tuesday with the White House unusually quiet on the progress. A little rally did spark towards the end of the day with investors speculating on an imminent deal. In the evening, talks concluded with the White House boasting that a deal was struck. The US would walk back some recent technology and chemical restrictions, as well as the threat to ban student visas, while China would loosen up its rare earth metal exports. However, the deal was basically just rewinding a few weeks by walking back recent aggression and continuing to talk. Markets fell on Wednesday, disappointed with the so-called trade deal. However, it would have fallen more if not for softer inflation data. The CPI topped expectations again for the third straight month. This was followed up the next day, with the producer inflation also beating expectations. Markets rebounded on Thursday, buoyed by inflation optimism. But then Friday. Thursday night, Israel bombed Iranian nuclear and military facilities, with Iran retaliating back with drone strikes. Crude oil surged 8% on fears for oil supply disruptions. Friday opened and closed solidly red as escalating Middle East conflict rocked the markets. Meanwhile, we also got a strong preliminary consumer sentiment reading for June, but the market's focus was solidly on Israel Friday. The Friday drop reversed an otherwise strong macro week. So what now? Well, the macro data was good. The June Fed meeting is next week, and markets are likely hoping for signal that rate cuts are coming sooner rather than later. However, there's still a lot of near-term uncertainty that we can't see the Fed just ignoring. Obviously, there's a whole set of new concerns with Israel attacking Iran, and it's not just about the oil. Plus, it's been 2 days since the US-China deal was announced, but China still hasn't even confirmed if they're going to sign off on the minimal concessions their negotiators agreed to. We're cautiously optimistic with the improving macro data, but we still see too much uncertainty near term to think the economy is in the clear yet. I guess we'll see what the Fed thinks next week.